Okay. If you guys have questions, do you all know how to use the chat tool at the bottom? You can just click on chat. You can pop your question in there. I'll keep an eye on those questions. And then when there's a break or Lauren's ready to take questions, we'll go through and take a look at those. Okay. Um, Before we get started, I'm just going to introduce our presenter today. It's Lauren Cuskaden. She's with LoCo Bookkeeping. Lauren is a heart-led business mentor and profit-first aligned bookkeeper who helps entrepreneurs feel clear, confident, and connected to their numbers. With an MBA and a deep understanding of both strategy and soul, she blends financial systems with intuitive guidance. She works with real estate professionals, contractors, designers, property managers, and other industry adjacent businesses to bridge the gap between day-to-day operations and long-term financial health. She's skilled in tools like QuickBooks Online and Relay, but what truly sets her apart is her ability to make finances feel approachable and accessible. Whether she's guiding her clients through profit first or untangling a messy spreadsheet, her focus is always the same: clarity, empowerment, and sustainable growth. As a recognized thought leader, Lauren brings both structure and vision to the table, offering practical guidance, accountability, and a big picture perspective that helps business owners navigate challenges, seize opportunities, and scale with intention. Her mission is simple: to support the people behind the properties, building stronger businesses from the foundation up. At her core, Lauren believes businesses should serve your life, not the other way around. So before I turn it over to Lauren, if you guys could just in the comments, just pop in your name, where you're tuning in from, and what you do, like if you're a realtor or a lender. I know that sometimes being in a commissioned positioned business, it's difficult to kind of manage the finances when if sometimes it feels like feast or famine, you know. So when things are good, they're really good. And then we have January, February, March, you know, come up and we're like, holy crap, can I even stay in this business? Right. So if that is you, you are definitely not alone. We have all been there at one point or another. And Lauren today is going to help us walk through how to manage those times so that we don't have to feel the famine part. We can live in the feast. So anyway, with that said, I'm going to hand it over to Lauren. Thank you so much for being here today, Lauren.
Yay, thank you. Thank you for having me. Super excited. And I just got goosebumps when you were talking about everything. Like literally feast or famine is going to be something that I talk about verbatim today. So it's just so funny how that aligns with what I'm talking about today. Like you're all meant to be here. I'm super excited that there's so many joining, and I am ready to share my screen. This one now, and we'll get started. Whoops. All right. All right, can y'all see my screen? Oops, hold on. Julie, can you see my screen?
Yes, ma'am, I sure can.
Okay, perfect. I just want to make sure. Thank you for confirming. Okay, here we go. So today we're talking about cash flow mastery, the profit first method. So if you've never heard of profit first before, that is absolutely okay. I'm going to give you the nitty gritty on all of that, and not only the definition of profit first, what that means for you as a business owner, but how to implement that. That's going to be the most important part for small business success. So like Julie said, my name is Lauren. Hello, everybody. I am super excited to be here today and share so much knowledge that I have gained over the past several years when it comes to profit first, and working with small business owners like yourself when you're looking to find success, scale, and earn a profit, right? Because as a business owner, the whole point of owning a business is to make a profit. And if you're not able to pay yourself, then you're not a true business owner. So what you can expect today is a breakdown of cash flow versus profit. There is a very distinct difference between the two. Cash flow is something that really flows in and out of your business, right? Why real estate professionals face unique challenges. Just like Julie had mentioned, y'all are in a very unique industry. Even so, I saw Ryan, he is in insurance. it's very similar. You have these ebbs and flows. You have feast or famine. There's good parts of the year and there's slow parts of the year. And I'm going to help teach you today how you can thrive no matter what time of year that is, how the profit first method works, and how to make it work for you. And then I'm also going to provide you with practical real world tips on how you can start using it right away. This is something that you literally can implement after our webinar. So one of the main things that I wanted to leave y'all with today is not only learning a little bit more about Profit First, but I also wanted to give you tools that you could immediately implement, like I had mentioned. So what I did is developed 3 different tools specifically for real estate and business professionals, because again, y'all are very unique. You have a very special industry that again kind of ebbs and flows. And that is something, all 3 of those tools are going to be something that you can implement with that Profit First method. So to begin, I want you to have a really strong understanding of why cash flow matters. Cash flow is sometimes confused as profit, and they are very different. So the difference is cash flow is the actual movement of money in and out of your business, right? You have income and then you have expenses, or you're paying bills. That's the cash outflow. And it's basically the cash flow is what pays your bills, covers your payroll, keeps your business running day to day. Profit, however, on the other hand, is everything that's left over after all your expenses are paid, at least on paper. There's a catch. You can show a profit and still not have enough money in your bank account to actually pay yourself. So that's why I'm I like to stress the difference again between cash flow and profit, because I have so many business owners that come to me and they're like, here, I make this much money. I have it on paper, but they can't pay themselves. They have cash flow and that's great, fine and dandy, but where's the profit? So you might look good on paper, but in the end, if you can't prove a profit, it's defeating the whole purpose of owning your own business. So this brings us to the feast or famine cycle that Julie had actually mentioned before. Again, I'm so excited that this just fell into line. And the feast or famine is especially common in the real estate industry because, and related to service businesses, but because 1 month you have contracts and you're closing deals and your cash is flowing in and things are great. And you're like, let's plan vacation, let's go out to eat, let's celebrate. And then the next month it's totally dry. You're waiting on payments, you're juggling expenses, you're relying on credit. And that's where that cycle starts to come into play, right? So you have your feast and then you have your famine, and somehow the cycle just keeps going and going and you can't break away from it. That's how the Profit First method is going to help break that. So from my experience and talking with so many business owners who get into this cycle, it creates anxiety and instability. I felt it myself before I implemented the Profit First method, and it just leaves your business basically unmanaged. And it can truly become the downfall of even the busiest businesses. You can be thriving and show, again, so much profit on paper, but still have nothing left over to pay yourself. And the scary part of this is that, the US Bank did a study that 82% of small businesses fail due to poor cash flow, right? Not because of business, not because of foot traffic, not because of their services or products that they're, giving back to the community with it. It just truly is cash flow, which means it's behavior. So how can we initiate just the small, subtle behavior change and initiate better cash flow management so that you are thriving as a business owner? Don't fall into that 82%. 82% is so high that it shouldn't be that high, because there's such a simple formula that can help you thrive. 82%, that's so high. So mastering cash flow is going to give you control, is basically what I want you to know. And with control, you become confident, you have clarity, and ultimately it's freedom in your business. Common cash flow challenges in real estate. Again, you guys are in such a unique industry. And now that you have a better understanding of just how critical cash flow is, how poor cash flow management is one of the top reasons small businesses fail, I want to talk about what it looks like specifically in this industry, and how unique it is. So, and this again includes businesses that support real estate, insurance, home renovators, contractors, photographers, stagers, everybody in those groups. So cash flow problems are sometimes not easy to flag, especially if you don't know what to look for. So they sometimes creep in through everyday patterns that we've normalized. And you can see 4 of the main ones that I've listed here: irregular income, delayed payments, hidden costs, and again, going back to that feast or famine. Y'all are probably going to hear me say that quite a bit today. So when it comes to irregular income, most real estate professionals and service providers don't earn on a predictable schedule. Agents, for example, rely on commission. Contractors and photographers may be busiest during, let's say, like spring and summer, but then they see a really sharp slowdown in the fall and the winter. And that seasonal nature makes it really hard to plan ahead without a system in place. If your money doesn't have purpose, you need a system. Delayed payments, for example. So even when the work is done, the money isn't always in your account, or it doesn't show up right away. So let's say escrow closings can delay commission payouts, right? Contractors and vendors often wait weeks or sometimes even months, I've seen, for invoices to be processed and paid. And that delay can put extreme pressure on the ability to pay yourself or your team. I've had a lot of business owners come to me struggling, or they're so behind to pay their vendors, 1099 contractors or employees. And, again, that can create anxiety because that's someone else's mortgage, someone else's rent, someone else's groceries. And you don't want to be that business owner that doesn't have their stuff together enough to pay your employees. Hidden costs, think about expenses in this industry that can be irregular and unpredictable. So you've been like marketing campaigns, software, licensing renewals, tools, materials. Sometimes subcontractors have to pay, and these often don't appear in a monthly budget until they actually hit your bank account, right? You run to Menards as a contractor, you pick up a few things because you forgot it for a job, and then all of a sudden you're in the negative, or you're having to put it on credit, or you're pulling from your savings account. Going back to the feast or famine cycle, just put this all together and you end up with what we call literally the feast or famine. And it's a trap. So you don't want to fall into it where, again, 1 month you're flush with cash, next month you're stretched thin, maybe even leaning on your credit card to cover that gap. I hate seeing that, but that consistency is, again, what leads to stress, burnout, sometimes bad financial decisions. It's that just terrible cycle. And you're getting into a bad habit of working and operating your business out of urgency, not abundancy. And there's a very distinct difference. Again, similar to cash flow profit, you have a very fine line between the two. Operating based on abundance, operating based on urgency, 2 very, very different things. But the good news is we can fix that today. So the flow, going back again, is in and out. You have your cash inflows, excuse me, you have your cash outflows. And again, it's not the same as profit. Cash flow, very different than profit. You can show profit on paper and still not have enough cash in your account to pay your bills, to pay yourself, to pay your vendors. This is one of the top reasons profitable businesses still struggle, or again, become a part of that 82% and just completely go under. So your cash inflows are going to include your commissions, things like payments from clients, reimbursements. And it's important to know that when the money is actually received, that's when you are accounting for it, basically, right? Not when it's earned. So again, kind of like a contractor, just because you finished the job and that invoice is still out there, you've not been paid. You haven't earned that profit yet. So one of the main things I actually always tell my business owners is track what's been invoiced and what's actually been collected. So they're not always the same, right? Jumping over to cash outflows, subscriptions, materials and supplies, payroll, taxes. These are the costs that drain your bank account. Everything that's outgoing whether or not your income is steady, right? That subscription is always going to come out on the 15th. You have to pay, excuse me, your utilities, let's say on the 25th. Your rent's coming out on the 1st. You might be able to, adjust those dates according to a grace period, but they are coming out regardless. And a lot of times I see many businesses overspend because they're only watching their revenue and they're not paying attention to their expenses. So jumping down then to the timing of cash, this is the most critical piece that I always tell my clients when starting the profit first method and looking at both cash inflow and cash outflow. So a big commission next month isn't going to help if the bills are due today, right? It's not going to make a difference. So again, that comes down to timing. Delayed payments from clients can create a shortfall. Even if you're technically profitable, you're still waiting on that money to actually come into your account. And another little tip that I usually give my business owners is to create a cash flow calendar. And that's going to help you better plan for the gaps between your income and expenses. And we'll get into how to do that just in a little bit. So the main point is when you understand your cash flow, not just your profit, you make smarter decisions. You're operating off of abundance, not urgency. And you stay out of that panic mode. You're not operating off of emotion. You can actually take control of your business and your finances. Again, if you don't have a grip on your cash flow as a business owner, you truly don't own your business. It owns you. And I know that sounds so cheesy, but I can't tell you how much that resonates with business owners once they implement the cash flow strategy and the profit first plan. Is just like this, you see the light bulb click. The profit first method is very different from what we were all taught in school, if you were even taught financial literacy in school, because a lot of times I talk to business owners who don't know a lot about finances. And the big thing with owning a business is you start it to provide a service that you're passionate about. You start it to provide a product that you are passionate about providing for our community, not because you're financially savvy, not because you're, a CPA and you know all the things. You want to start a business and thrive because it's something that you love to do, and you have a service again or a product that you're providing for our community. So this is where the profit first method can help bridge that gap between doing what you love and being financially stable so you can show profit and pay yourself. So again, the profit first method is kind of flipped. The old formula is sales minus your expenses, that equals your profit. There's your feast and famine cycle. It's hard to break if you are going off of that old formula. The new formula, which is the profit first method, is your sales minus your profit. Yes, you are paying yourself first before expenses. And then at the end of the day, you have your expenses. So kind of forget that old model if you can. Because the problem is this is where profit becomes whatever is left over if we operate off that old model, which isn't very much when your money just isn't being allocated correctly. It doesn't have a purpose. Profit first, again, flips that formula. So take your sales, pay yourself, what's your profit, and then that equals your expenses. So this little shift can change everything. It forces you to treat profit as a priority, not an afterthought. You take your profit first, and then you run your business with what's left over. And I'm sure a lot of you, I feel like right now are thinking there's no way. Like there's no way I could do that because my expenses exceed so much of this and I could never pay myself first. I promise you can. I would not be preaching this if I truly didn't believe that it's beneficial to everybody in the real estate industry, no matter what type of business model you have. I wouldn't be here. I would be sitting here today. So think of it like a cash-based envelope system, right? If we go back to like the Neolithic age of financial management, when you would take some cash, maybe as a teenager, or like for some of us who babysat, let's say in our younger years, you would take that cash and you put it in a little envelope and then you would store it away. It's very much like that envelope system, except now you're just applying it to your business. So what makes this method especially powerful for real estate professionals and service providers is that, again, there's an ebb and flow. You're dealing with irregularities in your income, and the profit first helps to create stability. You don't have to guess at how much you're going to be able to pay yourself at the end of the month. You're not pulling out your credit card to put gas in your car, to buy groceries. You're not wondering where the money is going to come from when you have to pay your vendors or your W-2s. It's going to be there because you have stability and control over that cash flow and profit. So the seasonal highs and lows, basically this is going to help you to build reserves to tap into. And because you wear many hats, it's going to bring simplicity. This is one word that truly resonated with me when I started to coach the Profit First method, especially with real estate professionals or businesses in that industry, simplicity. Because again, as a business owner, you want to be at the forefront of your business. You want to do the things that are making you money that you love doing, and you don't want to have to so much worry about the back end. This creates simplicity so you can have control of the back end and not become some financial guru and know all the things, right? Clarity, another word that just truly resonates with the Profit First method and me. So in short, Profit First is going to create discipline. It's going to create predictability in otherwise unpredictable income model, which is the whole real estate industry, right? So what I'm going to jump into now, basically, I'm going to show you how to set up your accounts and then how you can actually implement this into your business with just a few small steps. So we're going to reframe the formula, just like we talked about, flipping the traditional mindset, doing your sales minus profit, that equals your expenses. And we basically look at having 5 different core accounts. And what I'm going to also talk about in a little bit, I want you all to put in the back of your mind, Relay Bank. If you have not heard of Relay Bank, this is a Profit First bank that is by far the best bank that I have ever worked with as a business owner, as a bookkeeper, as a financial coach, as a business coach. Like this Relay Bank, I will talk about in a little bit, but by far the best bank for small business owners. So with Relay Bank, you are going to open 5 different accounts. Yes, 5. And guess what? It's all free. You're not going to pay anything for them. You have your income, your profit, your owner's pay, your tax, and then at the very bottom, that means operating expenses percentage. Operating expenses percentage, okay? So these 5 core accounts is where the Profit First practice really comes into play. So think of these, if you are a visual person, I'm very much that. If you are a visual person, envision 5 buckets. And over each bucket, you're going to have these names: income, profit, owner's pay, tax, and operating expenses.
You told me your dad was really supportive during that.
Income is going to be where all your revenue gets deposited. This is simply a holding bucket or a holding tank, not where you spend from. Literally just an account where all your income is deposited, right? Your second bucket then is going to be your profit. This is going to be a small percentage that goes here from that revenue. And this is your reward for owning your business. It builds up a true profit buffer. And I'll get into the percentages and things, how to determine that in a little bit. But you want your profit bucket to be anywhere between 1% and 5% of your total revenue. Jump down to that third bucket, your owner's pay. This ensures you get paid consistently. You are an employee of your business, are you not? Therefore, you should get paid. So it's not, an extra. This isn't after the fact. You are setting aside that profit or that owner's pay right then and there. You're an employee of your business. That's always what I tell my business owners. And then we jump down to tax. So the tax bucket is going to basically be usually about 15%. Again, it can vary based on your revenue of that total revenue. And the biggest thing that I always tell my business owners is you don't want to scramble at tax time. Your CPA is not going to be happy, or your tax strategist. Just do yourself a favor and set aside the frickin' 15%. It's not a lot. And I promise you, at the end of the year, when you go to file your taxes, your CPA is going to be the happiest clam, and you will be so relieved because you're not scrambling, because you set aside that percentage of taxes and it's not a surprise, right? That's one of the biggest things I can't stress: taxes. Please set it aside. Operating expenses is going to be that fifth bucket. This is what's left over. Everything after profit, owners pay, tax. Operating expenses is the very last one. This is what you run your business on. This is what pays your rent, buys your tools, your software subscriptions, your marketing. Everything left goes into operating expenses. So as you can see, I threw up a little example here for realtors just to help this make sense. So let's say, for example, you earn a commission check of $10,000, and using the profit first, we're going to allocate accordingly. So your profit bucket gets 5%, 500 bucks, easy peasy. Owners pay 35%. Boom, you just made $3,500. You paid yourself. Owners pay 35%. Jumping down to that fourth bucket, taxes, there's your 15%, setting that aside, $1,500. And then at the very end, what's left over? 45%, right? And there's your $4,500. And I know I'm probably speaking to this like it's super simple, but the behavior change behind this and knowing the percentages to allocate and being consistent in actually taking those percentages from your revenue bucket, from your income bucket, and putting them into the other buckets is huge. Little tiny steps, micro habits is what is going to catapult you into that next level as a business owner where you're showing a profit, you have owners pay, and you are not even questioning where the money is going to come from for all your expenses at the end of the month. Hopefully that makes sense. If you have questions, please pop them in the chat because I feel like there's some questions ruminating. Cash flow strategies by different roles. Again, the real estate industry is super robust is the first word that comes to my mind. It's just, there's a huge ecosystem that services the real estate industry. It's not just agents and brokers. I know y'all know that. It could be home inspectors, photographers, appraisers, contractors, reno. And we work literally with that entire ecosystem. We have real estate agents that work with us. We have roofing companies. We have a home renovator. I actually just talked with one of my home inspectors yesterday, photographers, you name it. The ecosystem is just flourishing. So it's really important to know how the cash flow strategy kind of dictates that profit first method in each role. Hopefully that makes sense. So real estate agents and brokers, basically, let's say, so at closing, immediately allocate a percentage to your profit, your taxes, and your operating expenses before the money even hits your spending account, right? So you already have it in your mind. Okay, I know it's coming. It hasn't hit my account yet, but it's going to be 5% here, 15 here, 45 here. So you're setting yourself up to allocate those funds accordingly. You get paid to work, owners pay, right? And then you get rewarded for owning the business. That's your profit. Owners pay, you're getting paid to work. Your profit then, that's you reaping the reward for actually owning your own business. Profit is long-term security. Again, something that I always stress to my business owners when I'm talking about strategy, cash flow, profit first. Profit is your long-term security. You are setting yourself up for success, and you are mitigating that risk of becoming a part of that 82%. So that's really the profit first difference and why this method builds sustainability and motivation. You have tangible evidence that your business is thriving. And you can automate your tax savings. Something kind of like a side note that I just wanted to tell you, with Relay Bank, you can automate the transfers into different buckets. So if you're allocating 15% into your taxes, you can set that on an automation where every time you have income hit your revenue account or hit that income account, boom, 15% automatically goes into taxes. It's just like you would do if you allocated a certain percent into your savings account. And then you don't have to think about it. And then at the end of the year, guess what? I can't even tell you how many business owners have said to me, Lauren, at the end of the year, I automated my tax allocation. I didn't look at it for like a whole quarter. And I went in there and there's so much money. Like I might even have money left over after paying my taxes. Great. Love it. I can't even tell you. It gives me goosebumps to talk about that because that's the tangible evidence I'm talking about. Planning for dry months with that buffer account, right? So you set up the buffer or that vault account to prepare for your slow seasons. Even putting away just a small percentage, like I'm talking 1%, can make a huge difference. So contractors, renovators, let's jump over there because we use a lot of job costing for you guys, estimated with profit in mind. Basically, you can estimate your labor, your materials, your overhead, and your profit before you even take the job. This is the biggest thing with contractors that I feel struggle with because they just jump head first and they're like, yep, let's do it. But then you don't account for everything that's involved with actually completing that job. So you're not waiting until the end to see what's left, but building profit into the pricing before you even start. Getting deposits and milestone payments is what I like to call them. Not front loading your work or buying materials without getting paid, putting it on credit. Don't do that, please. Always secure a deposit, right? And then structure the rest of the payments around the project, those milestones, demos, rough-ins, completion, etc., right? Allocating every payment immediately, again, for contractors. So when the money comes in, split it across those 5 buckets. Your profit, your owner's pay, your taxes, your operating expenses. And that's truly going to keep your cash flow healthy and your business sustainable. The other big thing, for contractors, for those of you who are on here, contractors, only invest in new tools, even vehicles. We've had some contractors buy vehicles or tech when the funds are actually allocated and in your account, right? You always want to be in the positive, not the negative. Home inspectors and photographers, appraisers, bundle your services. This is a super easy way. If you offer package pricing or monthly retainers to create more consistent income and that cash flow, you can build customer loyalty and you build sustainability for your business. You can monitor your equipment and software costs pretty easily by tracking recurring expenses like your gear, your insurance, your editing tools, because those are truly the things that can eat into your profit if left unchecked, like very easily. That's where you fall back into that feast or famine cycle. Outsourcing admin tasks like bookkeeping, scheduling, and admin can be delegated so you can very easily stay focused on revenue generating work. Because again, that's the whole point of owning your business. You don't open a business, or you don't start as an entrepreneur because you want to be a tech savvy person and know all the things. Newsflash, if you didn't already know, as a business owner, you cannot do it all, ever. I've tried it and I failed. So personally, I can attest that it does not work when you try to do it all. You have to delegate. And you can be more on the forefront of the revenue generating work, doing what you love, providing the services that you're passionate about and the products. Just like I mentioned earlier, just you want to be on the forefront, right? So treat yourself like a premium service brand. Lean, efficient, and focused on value delivery. That's where that customer satisfaction and loyalty is going to come from. So other real estate professionals, again, kind of like that ecosystem, identify your slowest paying clients and tighten up that billing process. This is one of the easiest, I don't want to say tricks, strategies that a business owner can implement yesterday, actually. If you can tighten up your billing process, use automated reminders, follow-up systems, you can very easily implement incentives or you can penalize customers if they're late on their invoices. So for example, you can offer discounts if people want to pay their invoices early, or you can charge fees for late ones. And that is going to greatly improve your cash flow predictability. Real-time financial software, really quick, because I have a lot of people ask, please use a spreadsheet. Don't write it down. God love all my clients who are old school and don't want to get onto QuickBooks and send me literally pictures of a notepad with their finances. That's great. Just please don't do that. It's going to be so much more efficient for yourself. You will have so much more clarity, and there's value in investing in software like QuickBooks if you're there. Or bonus, after today, for those who have attended, I have actually created an entire spreadsheet for bookkeeping. If your business is just kind of on the smaller side, you're not ready to make the investment in QuickBooks, I have a free spreadsheet that I'm going to send to everybody that is going to change your world. All right, so moving on to the tools and best practices. Obviously, I mentioned QuickBooks, but banking structure. Going back to Relay Bank, you're going to set up those 5 different buckets, 5 different checking accounts. That's going to be literally the foundation of beginning this profit first method. So again, you have your income, profit, owner's pay, tax, operating expenses that we discussed earlier. You're giving your money purpose. It helps to eliminate overspending, surprises. Money has purpose. Allocate accordingly. So the cool thing too with Relay, when you open those checking accounts, it doesn't have to be checking account 1, checking account 2, checking account 3. You can get super crafty and you can nickname all of them. I won't even tell you the nicknames that I have for my accounts because they're just weird and probably won't make sense, but you can nickname them. It makes sense to you, and that's all that matters. Your bookkeeping system, use QuickBooks. Something that is going to allow you to see your money, cash inflow, cash outflow, expenses, to see your money clearly. Clarity, sustainability. That is going to develop the foundation again, in addition to those 5 buckets, those 5 accounts, when you're developing that profit first method. And it's going to save you time, right? I love my clients who write everything down, but it's very time consuming. It's tedious. Doesn't work. Just don't do it. And then you're reviewing your transactions to begin on a weekly basis, and then you can eventually transition to quarterly. But in the beginning, I want your hands so deep in your books, looking every week at the transactions that are in your accounts, incoming cash, outgoing cash, your expenses, because that's where you start to see the flags and you can pull away from the feast or famine cycle. Budgeting is a huge one. After you've developed those first 2 systems, building a 3-month rolling budget. And again, I feel like some of you were like, yeah, budget, I get it. I've tried it. It's just not work. Okay. But this is the difference between a successful business owner is just literally consistency and someone who wants to say they're a business owner and isn't thriving, doesn't have profit, and might look great on paper, but at the end of the day, you have nothing. There's such a big difference. Don't be that person. Own your business, take control, establish a budget. The cool thing today is, again, for those of you who are attending, I'm going to give you a step-by-step guide that you can implement so easily into your profit first method, into your business now. It's a 90-day profit first method budget, basically, that's going to help get you started. Like, I don't want to say stupid proof, but I used it and I didn't feel stupid when I first started. I just felt in the dark, I guess. And after I did it, it was like this light bulb, like I said, clicked. And I'm like, oh my gosh, this was this easy the whole time. Why did I not do this sooner? Why? I don't know. Don't make it harder on yourself. So that 3-month rolling budget, you're forecasting your income, the expenses for the next 3 months, updating it monthly. So you always have a forward-looking financial view. You're always in the positive. You're setting yourself up to operate on abundance, not urgency. And it keeps it simple. Simplicity is where it's at. That's going to keep you working on the forefront of your business. And that's where you're making the money, right? It's not a trap. It's just simply a tool. Automations. I know I mentioned this a little bit earlier. So if you can automate all of the profit first method, your income, your revenue, everything that we talked about, just in a nutshell, right? Just automate it. Make it easy on yourself. This is simplicity at its finest. Going back to the percentages, you can plug those in Relay Bank, and you can adjust them, weekly, month to month if you need to, but just automate it. Calendar reminders. I can't even tell you how often I'm throwing up tasks on my workplace calendar so I don't forget to go in and do a financial check just for myself on a weekly basis, on a quarterly basis. Everybody's different. Some people like to be in there every week once they have an established method in place. Other people are cool looking at it maybe like twice a year, right? So these tools and practices are super simple, but they're powerful, and they are going to free up your time and reduce stress and just basically help you manage your cash flow with confidence. Super quick, I wanted to give you an example of a photographer that we started to work with last year, and they were very much in the weeds, is what I call it. Only had one bank account. They were just a hot mess, basically. And we took over their books because their business was thriving and it was busy and they were making money, but somehow kept going into credit card debt and couldn't pay themselves. And they were scrambling to pay their vendors. Why? They were a thriving business. There was absolutely no reason for them to be struggling like they were. So again, they were operating out of just one single bank account. When in Profit First, we want 5 at least. So every dollar looked like it was spending money, right? It was just basically an ATM. There was no clarity between personal pay, taxes, what was left to run the business. And then they were constantly struggling to cover taxes and they couldn't pay themselves. That's not fair. Again, you start a business to reap the rewards, not struggle. It's not fair to you. And every expense felt like a guessing game. Buying new gear, they told me they would just go into debt. They would put it on a credit card. So it was pointless. So no plan, constant stress, basically. So what we did, implemented the Profit First strategy. Super simple. We did a 90-day plan, opened the Relay Bank, started those 5 accounts, determined what percentages based on the revenue should go into each bucket. Boom, that was it. We laid the foundation. In 3 months, I can't even describe the face this business owner had when they called me and we were going to review their books. It was a quarterly review, and they were just, the word is probably elated. And I sometimes get emotional talking about it because it's such a simple thing that I feel like I didn't do very much to help them get there other than just say, hey, here's your 90 days. You can set yourself up. And they were just, I guess, beside themselves with how much tangible evidence profit they were making. They actually had control over their business, right? So we created a seasonal budget. We planned for the slow months, especially winter when the business had dipped. And basically their money had purpose. That's all it came down to. Each dollar that came into their account had purpose. They saved 15% on taxes last year. And I even actually, so I have a good relationship with their CPA. We work with him very closely. And he was like, I don't know what you all did, but this was the easiest filing I think that I've done in a really long time. So that made me feel really good. And I know it made our photographer client feel really great too. So, and again, like verbatim, for the first time, the owner received a consistent monthly paycheck and wasn't randomly drawing out of their account. And, you know, they started to fund their purchases. They weren't putting things on credit cards. It literally is just because they implemented this Profit First method. So tangible evidence. Relay Bank. Here is the fun stuff. Again, if you've not heard of Relay Bank, by far the best bank that I have personally worked with. I've recommended it to 100% of our bookkeeping clients. Those who have implemented Profit First method, used Relay Bank, thriving. It's the easiest thing. So the biggest difference is they really go beyond the banking basics. It's smooth. You can create sustainability. It allows you to set up multiple accounts like your profit, taxes, owner pay, and everything that we've talked about today. And the transfers are simple. The automations are built in. And then it's made specifically with real business owners in mind, right? This isn't for just like a Joe Schmo on the street who wants a checking savings account. This is specifically for business owners. And you don't need basically to wrestle back and forth with your bank to stay financially aligned. Relay is Profit First. This is actually how I heard of Profit First to begin with. So they're going to help you create a flow that matches how you actually run your business. It's going to be clear, it's going to be organized, and it's going to be rooted in ease. So my top 2 reasons that I always like to share with people who are questioning why I'm recommending starting a Relay account. Side note, you do not have to close your current bank account. This is simply a supplement too, okay? So you can automate your transfers. Again, simplicity at its finest. Don't make this hard on yourself. If you can automate the transfers of income into each account using those dollar amounts or percentages is what I prefer, you literally can put those allocations on autopilot and you don't have to worry about it. Obviously, in the real estate industry, you have ebbs and flows. So as your revenue adjusts or changes throughout the year, you can go in and you can very easily adjust those percentages. The other super great thing that I love from a bookkeeping standpoint is that every transaction includes a clean description. So you don't have to guess or Google where it came from. And I don't know if y'all, so picture your banking statement. So if you're looking at your banking statement, you see the date, the charge, the description, and it's like something super weird, like CBG 1129 State Road 23. Like, what? I know I spent that amount. I have absolutely no idea. Like, I don't even remember where that was, but I know the amount sounds right. Why do I have to guess on the description? Relay eliminates all of that. And I can't even stress how much effort that has taken off, again, my plate as a bookkeeper, or even you, if you're allocating your funds into those bank accounts and then jumping into your spreadsheet and looking at your expenses every month, you don't have to guess where your income went when it's some crazy odd description of the expense being pulled from your account, right? It creates a clean description, right? And the other cool thing is that it integrates really well with QuickBooks Online, or if you're using Wave, I prefer QuickBooks, but it integrates seamlessly with this. I know we're close on time, so I want to jump over. If you have questions, now is the time to ask. Let me jump over and I will stop sharing. Oops, my screen. Is it back to you, Julie? Yeah, I see you. There you are.
Thank you so much. What great information. This is so good. I am definitely going to be checking out Relay Bank, and I'm sure probably most of us on this call have already Googled it. Arpita had a question. Arpita wants to know what kind of expenses can we show from as a realtor, like in the operating expenses?
Anything you want. It could be marketing. It could be, let's say you do a branding shoot, right? That would fall under marketing. Literally anything that is coming out of your account, let's say as a subscription, you're paying for content subscription or licensing, those are all expenses. It varies. So when I say anything, I know that's very general, like it's a general blanket, because it's so vastly different between each individual person as an agent, as a broker, as a business owner. So that's something that I can help clarify. If you have questions on, let's say like something is coming out of your account and you don't know whether it should be an expense or, even like a liability or an asset, we can talk more about that if you want to email me separately. But anything that's outgoing and you're paying, that's an expense.
Okay.
Is that helpful? Does that make sense, Arpita?
She's still on here. Yep.
Drop it in the chat. Okay.
Okay. Also, okay, so I know you said the percentages could change. So that 45% that you had on there for operating expenses, what if you have extra money left over after that? Where do you recommend putting that?
So it can vary depending on your business model. Going off of, let's say, just a real estate agent, again, with that $10,000 commission check, if you have a little bit left over, you can put it back in taxes, or you can put it back in your owner's pay and just pay yourself.
Okay, so you don't recommend like leaving it in that bucket for future use?
You very well could if you have a good understanding of your expenses. But okay, let's say you put the 45% away, all your expenses are paid at the end of the month, you still have $100 hanging out. you can leave it in there until next month, because what if there's something next month that you decided to invest in? You don't have to think about it. Or if you have your expenses on lock, you know what's coming out, when it's coming out, how much is coming out, take that $100 and pay yourself.
Okay.
Yeah,
Awesome.
that's a great question. Yep.
I think there was some people are wanting your contact info.
Oh, absolutely. Let me, here, I'll pop this in the chat. And what I'm going to do, everybody, is I believe, with your permission, Julie is going to share your emails. So I'm going to send out the notes as well as those 3 downloads. Make sure I got all my O's and my K's. Okay. And then this is, I'm going to send out those 3 downloads. So you have the bookkeeping tracker, you have the 90-day profit plan to start, and then you have, let me see. Oh, I don't have it on here. Okay. I apologize. I was going to show you that 3rd download. It's really unique for allowing you to set automated percent payments. Yes, they are. That's a really great question, Derek. So is Relay unique for allowing you to set automated percentage payments from your paychecks for so many accounts, and do regular bank accounts do this as well? Regular bank accounts will do a certain amount, but usually it's only between a checking and a savings. And you're going to pay more the more accounts you open with a regular bank. So with Relay, because they're profit first, they encourage you to open up to 50 checking accounts. I kid you not, 50. And there are no charges to open that many checking accounts. I have yet to work with somebody in Profit First who has that many checking accounts. I think right now the top number of checking accounts my one client is working with is like 12. So this is very unique to Relay. Again, yes, you can do this at a regular bank, but it's usually just between a checking and a savings, right? And how do you allocate your owner's pay? How do you allocate your taxes? How do you allocate your profit? You can't with just 2 checking accounts. It's hard. So very much recommend Relay.
Awesome. If any of you want to ask her a question directly, you can unmute yourself. We have about 6 minutes left. Anyone?
You guys, come on. I know you're reeling with questions. Does this seem confusing to anybody? Can y'all be honest? Is this confusing?
I think it sounds like a lifesaver, honestly.
Yeah.
Just having a structure. And like you said in the beginning, it's just a mindset shift.
Yeah.
And sometimes we get so overwhelmed by the thought of like all the things that our way of managing that is not managing it.
Sure.
So we just continue and let the stress levels continue to rise. And no, I think having some structure and some guidance around it just makes it seem so much more simple.
Right. And that's the biggest takeaway that I've experienced from the clients that I've worked with implementing the Profit First method is clarity and control. Those 2 words resonate just so well with me, because again, it's such a simple shift, but it's consistency. And again, as an agent or a broker, just anybody in the real estate industry, you have that feast or famine. You don't want to be a part of that 82%. Or, you know, you're thriving one month and you're going on vacation and you're taking your kids to Disney. And then in January, you're like, oh crap, like I have to pay my phone bill in 2 days and I have to transfer from savings because I don't have the money. Like, just don't. It's so unbelievably simple. I can't stress that enough. And I would love nothing more than for everybody on this webinar just to implement the 90-day method of implementing Profit First. Start your Relay. It literally costs nothing. There's no money out of your pocket. And I don't know, let me go back to sharing my screen super quick. I know we just have a second because
So Lauren, while you're doing that, if somebody had the question of, if I set up all these Relay accounts, my owner's pay, can I transfer that from Relay into my current bank?
Yes, yes,
Okay.
yes. And that is why I always tell my owners, this is not something that completely takes over, like your Capital One checking or your Chase or even your Notre Dame, like NDFCU. Keep those accounts, because after you do your owner's pay, transfer that. Like I bank with Capital One, and I just try to reap the rewards of all the different APYs that people have. So yeah, absolutely keep that, transfer your owner's pay, and then there's your spending money, or there's your owner's pay, right? So really quick, with Relay, two savings accounts, up to two savings accounts is what you can have, up to a little over 3% APY. Like that's huge. You don't get that a lot with banks. And then you also get a physical and a virtual card. So like for contractors, for example, like I have a roofing company that we work with a lot, so many different vendors, a lot of different like 1099 employees who come in and they need to send them to Menards for supplies. Obviously, you don't want to give this person your debit, credit card, whatever. So with Relay Bank, he has everything set up. He's operating on Profit First. He has his operating expense account. He can create a virtual card completely separate from his to then share with his employee with an allocated amount to spend. So if he knows the expenses at Menards, he's going to go buy these materials, should cost no more than $50, $50 on the card, virtual card is created in literally like a minute. He sends it, he can text it, email it to his employee. And then, of course, Apple Pay is like the big thing. He can Apple Pay at Menards. He's not spending more than $50. The owner doesn't have to share his own personal debit card. So that's one of the coolest things. And then, of course, if you do need a credit card for your business, they have 1.5% cash back. Like I can't even stress, like it's just, there's so many great things about Relay that you cannot get with just a conventional bank. Okay, now I'm done.
Awesome. Thank you. Thank you. Thank you. That's
Yes, you're
just such
welcome.
great information.
Hopefully everybody got my email. Like I said, with your permission, Julie can share your contact information as well. I will get those notes out within 24 hours, and then all three of those downloads. And then if you have questions, please don't hesitate. You can email me directly, and we'll talk more.
Also, Lauren, did you pop your info in the chat? I don't think I saw it.
Yeah, it should have come through.
Oh, there it is. Okay.
Yep. Yay. Yep. And then if y'all are on social, I do post a lot of different helpful info tips on both Instagram and Facebook. So if you haven't already, that's my only ask for today, other than paying yourself first, is to just pop on and join us in the LoCo community on Facebook and Instagram. We would love to have you.
Thank you. You're the best.
Yay.
We'll do this again.
Thank you. Bye, everybody.
Bye, guys. Thanks for joining us today.